Diageo then reported earlier this week. We said last week, sort of trailing ahead, that LVMH's wines and so on division had been not faring terribly well, and that might be leading something about Diageo. It kind of was, although to be honest, it was kind of led by a whole bunch of things. The stock is down 8% this week, and Deborah Crew, the CEO, announced that she was pleased at the return to growth from the first half, as they call it, of the year, with their first half of the year ends in December, but they call the first half 2025. And my initial reaction was kind of, what growth? Because I read my way down the statement and it said that volumes are down 1%, net sales were down 1%, marketing was down 3%, adjusted operating income down 4%, operating income down 5%. Profit attributable to shareholders down 12%, earnings per share down 12%, and adjusted earnings per share down 10%. And I sort of wondered exactly what growth is this that we're meant to be talking about here. And there is some growth to be found. If you take an FX neutral basis for the sales, which was down 1%, then you get plus 1%, because it was a kind of 2-ish% headwind on foreign exchange. So there you go. There's your growth. In a world where inflation is going to stay above 1% for at least the foreseeable future, I'm not convinced 1% sales growth is much to be getting excited about, but that's what she was talking about. Didn't like this report very much at all. Steve, I couldn't see much to be positive about here if you're a Diageo shareholder, certainly in the short term. Long-term competitive advantages I think are still intact, but one of the things I flagged to you before this report, actually about a week ago now, was that their debt pile has been rising at Diageo fairly steadily, actually, over the last few years. That's not just on Deborah Crew's watch, and we talked amongst ourselves about the kind of situation that she's picked up, but their debt's been getting high, and they are now finding themselves with income sliding backwards as well, above their target leverage ratio, and they need to kind of bring that down. They are marking this as an issue on their own assessments as well. But the big problem they have coming up is it's difficult for them to say much positive going forward, because their biggest selling US products are Crown Royal Whiskey, which is from Canada, and Don Julio Tequila, which is origin locked to Mexico. And those are two countries that have recently had 25% tariffs introduced on them, although Mexico, I think, is probably suspended for the moment while they figure out some sort of additional negotiating time. But anyway, Diageo had time to mention these in their report. It came out after the kind of initial announcement, but clearly an ongoing situation there. I think tariffs are transitory. Steve, this might be famous last words. It often is when people use that kind of expression, but my sense is this is more of a negotiating tool than anything. That being said, my other suspicion here is that Diageo is using this threat of tariffs to hide some other things that are going wrong with this business. So they pulled in their guidance, which was meant to be 5 to 7% revenue growth for the medium term. You tell me whether you think tariffs are the reason, or foreign exchange even is the reason, that net sales were down 1% instead of up 5% in the last half a year or so. And okay, they may have been back in growth territory technically, but they're a long way short of that kind of medium-term target, and it's a little hard to say where that growth is supposed to be coming from right now, especially since most regions were back to relatively positive stuff. So I had the impression that tariffs are a reasonable concern of theirs to have, and also that they were using that to cover more things that investors ought to be more worried about. I still own this, but I was not impressed by this report. Steve?
I thought the report was absolutely garbage, and the thing I hated the most about the whole plan was, for the last few quarters we've been getting fed this line that there's a plan, and this plan, will be communicated in due course, and we haven't got any idea what the plan is. And I think the reason we don't know what the plan is because there isn't one. I think Crew has taken over the reins probably a little bit faster than she expected to, but I genuinely don't believe she has a clue how to turn this around. And I think the longer she can drag this out, drag the salary, get the salary, the better. I fully expect that because of her inability to communicate effectively with shareholders and investors, she'll be out of a job rather quickly, because there's a hell of a large debt pile at Diageo, and a number of the debt holders will want to know what they're planning on doing to return to growth, because you're not going to be able to hold that amount of debt without doing so. So when I originally bought it, I was thinking, right, this is a decent price for now. Let's see this growth and this, how we're going to get to this 5 to 7% growth, because the 5 to 7% growth would be good. If I felt like they were going to get there, we would all be over the moon with 5 to 7% growth, and we're not getting anywhere near it. And they're blaming things like FX and things like that. Well, they're last year's problems, really. The FX, when it was, there were 3 or 4% headwinds against something, that takes you from 5 to 1. When the FX has been, 1.5 to 2%, that's taking you from 2% to 1. You're not blaming FX. There's something fundamentally wrong with your business. Now, both of those sets of tariffs have been postponed for a month, Steve, the Canada and the Mexico ones, and I expect that they'll be postponed from that point onwards. They were just a bullying tactic to get some more beefed up borders from both sides. I think 100,000 troops from Canada, 100,000 troops from Mexico, just protecting the border. I don't expect those tariffs to come back. So for them to pull their guidance is just cheap. So I took a good look at this and I thought, do I believe that this management team is competent enough, which is one of the first things I check. Do I believe in this management team? Do I believe that they're competent enough to return to 5 to 7% growth? The answer to that was immediately no. So without any hesitation, really, it was cut on the 4th of Feb, and I won't be looking back until I feel differently about that, Steve.
It's interesting how, to me, hearing different companies talk about tariffs, even if they say sort of broadly similar things, it sounds so different from a company that's doing well compared to one that's not. So my initial kind of thought for comparison was a couple of weeks ago now, I think on this show I talked about Games Workshop and their most recent update, which was strong. And they did say, tariffs coming, can't do much about tariffs. All we can do is get ready in the best ways that we can and respond when we know the situation more clearly. And Diageo sort of said the same thing, but it doesn't sound as strong when you're a company that's not putting up good results in this kind of way. I mean, if you really dig into the details, you can find some things about what they're trying to do, like import bottles ahead of time and building out inventory in the States and so on to avoid bringing stuff over via tariffs. But it seems like, it may well be that there's not a lot they can do, but when they tell you this from a position of falling sales and taking market share in the US, but nonetheless overall sales are going backwards here on an actualized basis. It feels a lot like the tariffs are a bigger problem than they are for a company that's doing well, even if there's nothing else they can do. And that was my general feeling that I got from this update of things are going badly and there's not a lot we can do about it. And it feels like Diageo is kind of a business. It feels like the sort of business you want it to be the case that a ham sandwich could run this thing. Probably it couldn't. Deborah Crew's background is from RJ Reynolds, so the cigarette company. I don't have any personal kind of beef with her particularly. I think she's inherited a tough situation. She's following on from a difficult act, as you say, probably got the job early. But I'm also not massively inspired by what she's putting together here at the moment. And that's... I'm never that impressed when management manages to pick out something and say, pleased with our growth in a report where nearly everything is down apart from the effective tax rate. I'd rather you said this was a bad quarter. Hey, look, if you squint, you can sort of say that we were up slightly. But realistically, this is not good.
It's beyond that, though, isn't it? Because they have a number of problems that we want them to address. So, yes, they have the tariffs. Yes, they have the fact that their sales are rubbish around the world at the moment. And maybe some of that is growth pulled forward through somewhere like COVID or something like that. But they also have problems with, Ozempic has basically stopping people feeling the need to drink. That's another headwind. But they also have the fact that Gen Z, probably in the face of how much their parents drink, have quite there's a lot of sobriety in across Gen Z. They don't drink, and these are all problems that Diageo have got to face up to. Now, this isn't like cigarettes where there's a huge regulatory issue here. This is all down to marketing, essentially. And they need to find a way to attract the next generation of buyers in, and I just don't really feel like they're doing that. I feel like Diageo just think if they make a zero version of everything, then that'll get the Gen Zers in. But it's not just that they don't want to drink alcohol; it's that they don't want to drink beers and not or a 0% beer, or they don't like the taste of beer, or whatever it is. And Diageo just don't seem to be addressing this issue. And this is my main issue with the lack of communication. I think the lack of a plan is this is what we want to see, like the 12 pumps and 3 squirt strategy that we got from Starbucks. At least that was a failed plan, but at least we got, these are my issues and these are the squirts and this is how I'm gonna squirt on the issue, is essentially what he said, doesn't it? And we're not getting that from Diageo. And it's kind of like, are you ignoring the issues? Are you just focused on this one issue? Because I can see there's a few more here that you really need to address. And we're just getting nothing from them. And I just can't abide by stocks when they expect you to be shareholders, but don't expect you to. They expect you to share in part of the business and the risks of the business, but in the process of doing so, they've got to try and tell you something about it. I actually put into Gemini, I put in all the earnings transcripts for the last 12 earnings calls, and I said to them, is there anything in here about any kind of plan? And Gemini read every single one of them and said, there is no information about a plan here. I said, is there any kind of clear strategy that is coming from these calls and these remarks? And Gemini said no. So that was it for me. I just think that was off it goes. Bye bye.
It's slightly bizarre, isn't it? It feels like they're a company that think they're a cyclical company. I mean, you take this from cyclical companies in a downturn. So if you think about Forterra or something like that, when people aren't building houses, there is basically nothing Forterra can do to sell bricks. People don't want them for anything else. When people are building houses, Forterra can't help but sell the damn bricks. And there's sort of not much point yelling at management in these situations and saying, why are the sales down? What are we doing to drive sales? They will say, someone got to build a house and then we can sell them some bricks, or build something and then we can sell them some bricks. And somebody else got to move first here. And Diageo sort of feels like it. I mean, we can manage our balance sheet basically through this to make sure we don't go bust. And they didn't do a great job of that, actually, Forterra. But that's the kind of thing you can do in a downturn. Diageo feels like it's behaving sort of that way. They feel like they're just kind of waiting for things to get better, but they're not really a cyclical. We don't really think of them as a cyclical in that way. And some people suggest they're kind of counter-cyclical, in which case they really ought to be doing better than they are. And I get that maybe there is a general drive against them and their entire industry, but I'm not sure that's the kind of thing that shifts itself around with a move in interest rates or something. That's kind of consumer preferences, and they may be kind of more durable, perhaps.
I don't know if you remember really early on, it was probably off air. Paul once said to us that he was at a gathering somewhere and he met somebody from upper management of a beverage
I definitely
company.
wasn't listening to this bit.
He wouldn't tell us who it was, but he said he was stunned by how little they knew about their own industry that they worked in. And, well, I mean, I've got my theories now on who he was speaking to, and he never told us. But I think I know who it was.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.